All right, guys. Awesome. Natasha, we are live. For those of you joining us today, I am Jessica Moore, realtor at Nest Realty in downtown Fredericksburg. And we are going to be talking with Natasha Anderson today and learning all about the VHDA grant process and first-time homebuyer options. But Natasha, do you want to tell us a little bit about you?
Yeah, my name is Natasha Anderson. I am with CMG Home Loans. I've been doing mortgage lending for around 9 years and particularly love helping first-time home buyers navigate the process of buying a home.
Awesome. Okay, perfect. So, well, let's dive in. I know with interest rates changing and the market changing, I feel like access to funds are on a big, on everybody's mind right now. And of
Absolutely.
course, we have the VHDA grant. Can you tell us a little bit about that program?
Yeah, so VHDA is now known as Virginia Housing. It is designed primarily for first-time home buyers. First-time home buyers can have owned a home in the past. They can, as long as they haven't owned and occupied a home in the last 3 years, they would be
Okay.
considered a first-time home buyer. The grant is basically free money that goes towards down payment.
Okay.
There's the primarily the largest two programs are FHA and conventional.
Okay.
And it basically provides you, with conventional, it provides you a 2% grant
Okay.
towards down payment. And then with FHA, it would be a 2.5% grant. So
Okay.
both of those would leave the borrower responsible for only 1% in down payment.
Okay. Yeah, that's huge. That's phenomenal.
Yeah.
And I know with the grant, a lot of times I feel like people think that, oh my goodness, I can't qualify because I know that there's restrictions on like credit and income limits. Can you speak to those things a little bit?
Yeah, absolutely. So if we're going to go the FHA route, you're only required to have a minimum of a 620 credit score.
Okay.
And then with the conventional route, you would be required to have a 640 credit score. And with regards to income limits, it's actually higher than most people think. In the majority of the counties around us, if you are a household of two or fewer people, then you would be looking with a grant at an income limit of $129,600.
Okay.
With a home of three or more people to do the grant, you'd be looking at income limits of $151,200.
So, and is that a household income, like total combined income for the household?
Yes, correct.
Okay. And in that household, do you count, is it only married people? Do you count, like, let's say you and your adult child and you both have jobs? Like, how do you define household?
Anybody that is working in the household.
Okay. So it doesn't have to be a family. I think that's important too, because people sometimes think, well, I live with my significant other, but we're not married, so they don't count.
Sure.
They count. Okay.
Correct.
That's good to know. Okay, perfect. And I know you mentioned the VHDA, the most common are FHA and conventional. Can that grant be coupled with a like a VA loan, for example?
Absolutely.
Okay,
Absolutely. And that's actually a fantastic option for veterans because a VA loan requires 0% down payment. So
absolutely. So go
then you're
ahead.
getting the grant on top of that.
Perfect. So that grant for someone using a VA loan could be used to like closing costs.
Correct.
Can they use it?
Absolutely.
What other things could they use? Could they use it to like buy down their rate, or how do, are there limits?
Yeah, absolutely. So closing costs include buying down their rate, the discount points. So it could absolutely be used, especially in this market, to get a lower rate. And speaking of lower rates, I know when we spoke previously, I mentioned Spark, a program
Yes.
called Spark. Spark is available in most of the surrounding counties, and it's
Okay.
basically similar to a grant, but what it does is as long as you qualify for that county's requirements for Spark, then they will reduce your interest rate by 1%.
Wow.
So today rates are in the sevens, 7.5. So as long as you qualify, and for instance, in Stafford, as long as you live in Stafford and you
Okay.
meet VHDA's requirements, then you would qualify for Spark. And if they have the funding left, that would automatically reduce your rate to 6.5%.
So something I just heard you say that I think is super important. So you mentioned funding they have left. So there's a cap on that program.
Correct. Yep.
Okay.
Yep. And I believe their fiscal year runs through October. I'm not 100% sure about that, but I could certainly loop you back in on that.
Yeah, perfect. Yeah, we can update that. So can Spark become, so I know you mentioned that the VHDA guidelines apply to Spark. So can Spark and you can get the Spark and the VHDA grant?
Absolutely.
Wow, that's
Yep.
awesome. Especially because I know typically the VHDA means there's a benefit. It's not just free money. Your interest rate tends to be a little higher. So then that can be
Sure.
offset with Spark.
Absolutely.
Wow.
Correct.
That's actually huge for people. And I didn't even know about that program. So I'm sure a lot of people listening are not as familiar. Like I've heard it kind of floated around or in
Sure.
conversation, but never knew what it was. So that's awesome.
One, it's unlike, I know that people are talking now, not to change subjects, but people are talking about buy downs,
Yeah.
temporary buy down loans. This is for the life of the loan, which is,
Okay.
again, huge.
Absolutely. No, I think that can save so much money in a monthly payment. And so so that's good news. We'll have to definitely circle back around because if their fiscal year ends end of October, that means they're re-upping their funds relatively soon.
Correct.
It's a great time to be really, really digging into that.
Yeah, absolutely. And we close these loans in the same time frame that we close any other loan. So
Okay.
30 days or less. And the only other thing I think I haven't mentioned is that you also have debt to income ratio that
Okay.
you have to stay in.
Sure.
That for this program is 45%. So
Okay.
if you make 10 grand a month, then all of your expenses plus your new mortgage can't exceed $4,500 a month.
Okay, gotcha. Well, I think that's a really, really cool program, especially I'm assuming, do you know by chance, this is a little bit of a curveball, so if you don't know, do they typically run out? Do you know within like the fiscal year the program runs?
So in my experience, I've never heard of them not having funds. Every time I've done the program, Spark has been available.
Okay, very cool. And I'm assuming that's specific to Virginia.
Correct.
Okay.
Correct.
And just for people chiming in, VHDA or now Virginia Housing is also specific to Virginia. But if you happen to be, listening from a different state, most states do have some sort of similar program. So you would just need to check or reach out to me or reach out to Natasha. We can find a loan officer and an agent in your area to help you get the ball rolling on these things too.
100%. And then one other thing, I'll throw a little bit of a curveball at you. They also, outside of the grant, there is also a VHDA plus a second loan.
Yes.
That is another way to keep funds in your pocket. That would be a first loan for conventional 97% of the value of the home, and the second loan would be 3%. So that would actually be a 0% down program. How the difference is that it's not free money; it's actually a second loan, and the same applies for FHA. The first loan would be 96.5%. The second loan would be 3.5%.
Okay.
So again, not to totally overwhelm people, but there are multiple options.
Okay. That's really good to know. So with the first and the second, can you still use the grant or Spark also? Like, can you put all the things together or is it kind of one or the other?
You can get Spark with the first and the second. Absolutely. Again, I know it's a lot of information, but if you have a 680 credit score with the second loan, you can actually get a second loan for conventional up to 5%. So then the extra 2% goes towards, I'm sorry, for FHA, it would be a 5% second. So the extra 1.5% goes towards closing costs.
Okay.
And then for conventional, it would be a 4.5% second. So that extra 1.5% would go towards closing costs as well. Again, that requires a 680 credit score.
Okay. So for those of you listening right now, obviously we're talking about really in-depth percentages and numbers here. Please don't get overwhelmed and feel frustrated. Call myself, call Natasha. She can walk through it and really detail her information to your specific situation. Because if you have a rough idea on credit, your household income, Natasha can let you know what programs are going to apply and make the most sense for you specifically. Right now, we're trying to give you enough information so that you can ask questions because we don't know what we don't know. So when we don't even know that these things exist, we mostly don't ask these questions. So, make sure you're reaching out to either one of us. I'll make sure you get in touch with Natasha, but her number is also right below us here. And so that you can reach out and get information. Because like what Natasha was just talking about, that means that if I can negotiate for you some seller closing costs, you could buy a house with virtually nothing out of pocket. You're going to be responsible for your inspection and your appraisal fee and your earnest money deposit. But that means your down payment and your closing costs could potentially be 100% covered between these programs and some seller subsidy, which we are seeing a lot of right now.
Absolutely.
So, that's huge. So there might be people listening, Natasha, right now who are like, okay, well, I know I make too much or my credit's not right there. There's also the USDA program for first-time home buyers.
Correct.
Do you want to do a little deep dive on that for us?
Yeah, so USDA is specifically designed for rural housing. So the home that you're looking to purchase needs to be in that area.
Okay.
The credit score requirements are 620, so very similar. And they really goes on household income. The income limits vary by county. So get with me on that. I can give you resources regarding property eligibility and income eligibility.
Okay.
But a great program, 100% loan to value, so 0% down payment requirements.
Okay.
It's a government funded loan, so the rates are a little bit lower than conventional, which is great. And the mortgage insurance is lower than conventional. So it's definitely an option that helps keep your payment lower and keeps your out of pocket expense lower.
Okay. And I think the USDA is a really great program if you're looking for just outside our like traditional shopping area. Like if you're okay with being just a little bit in the county, like Spotsylvania County, outside Stafford County, there is a map that we can give you to kind of give you an idea. If you're like, hey, that sounds interesting. I would say the biggest limitation is that geographic restriction, because otherwise it's a great program. Now, are there the same? So I know we talked about first-time home buyer, which is kind of tricky. Is USDA the same, where as long as they haven't owned a house in the last 3 years, like let's say they bought a house 5 years ago, sold it, haven't lived in it since, now they're a renter.
Yep.
Would they be a first-time buyer at this point?
Yes, ma'am. Absolutely.
Yeah, I think that's another. I feel like these programs, I'm so excited about these. I'm so glad we're talking because so many people like count themselves out before even talking to a lender like yourself and getting the information.
Absolutely. There are so many possibilities. And even if you're not ready today, we can put steps in place to get you ready a year from now, 2 years from now. I'm really in it for the long haul because there are so many steps we can take to get you ready.
So let's talk about that for a second, because I feel like that's one other area where people go, okay, I might qualify for the income, but not the credit. And I know, and you know, that you can take a look at someone's credit and kind of run them through a program and go, okay, well, here's what we need you to do. Here's the steps you should take.
Absolutely.
Can you kind of give us a brief overview of what that looks like for someone who maybe knows they need to work on their credit?
Yeah, sure. So usually what I would recommend is us having a consultation first, just to let me ask you some basic questions. What lines of credit do you have? What do you think, is causing your score to be that way? Just dig into kind of like what's happened previously. Based on that conversation, I'll determine whether I think it's a smart move to pull your credit today. Or I might be able to give you some advice. Open a secured credit card, put $50 on it, pay it off, repeat. Or if I'm like, oh, well, let me actually take a look, then I'll go ahead and pull your credit. And then we have credit enhancement tools within my company that I can run your credit through, and it'll give you specific steps. Pay this card to this balance. Remove yourself as an authorized user from this account. We'll give you specific steps to get to a target score. Really, it just depends on where that starting line is.
Okay. And I think you just said something that reminded me of one other thing I wanted to ask you about
Yeah.
before we run out of time was that I know, so you mentioned, paying off cards and things like that. And sometimes I feel like people hear that and they stop because they're like, well, I'm already living like in this tighter budget and I don't have an extra 500 bucks to pay off this credit card or whatever. I know you guys have a cool program to help people get money for housing, like from outsourcing. Can you tell
Oh,
us?
yeah.
Yeah, the home fund it. Can you tell us?
Yeah, absolutely. Yeah. So, something unique to CMG is our Home Fund It program. It is essentially crowdfunding. So, if you think you're going to buy a house in a year, 2 years, get in touch with me. Let's get you set up on this program. You can run a campaign, and anyone that you know can donate to this fund,
Okay.
and it would go towards down payment and closing costs.
Okay.
It anybody, usually most loan programs will only allow family members to help gift you money. In this scenario, anyone you know, teachers, friends, co-workers, employers, anybody can donate to your fund, and it goes into an account that is
Yeah.
your money that can be used for down payment.
That's awesome. I think that's so cool, especially if you like, I hope people's minds are spinning right now. They're like, okay, I can use the home fund it and have like friends and family member give me money. Then I can hopefully get the VHDA and Spark. Like once you put all of those tools together, I mean, you really have a really clear path to home ownership. So
Absolutely.
I think that's awesome.
Yeah,
Well,
and I'm in it for the long haul. Like this doesn't have to be a tomorrow thing, right? Like we can work together for months if that's what it takes to get you ready to buy a home.
yeah, that's awesome. I think that's so important too because there's no wrong time to contact someone like like Natasha. There's no wrong time to be asking these questions and setting yourself up because I'm the same way as Natasha is. Like let's sit down today and let's figure out buying a house is not just like a roof over your head. It's a piece of your overall wealth building and investment strategy. If you can take the emotion out of it for a second and go, this is a piece that's going to lead to financial freedom. How
Mhm.
can I get there? Maybe it's not tomorrow, maybe it's in a year, 2 years, 5 years. But if you don't have guidance along the way, then we're kind of spinning our wheels, right? So make sure you reach out to us. If you miss this and you're seeing the replay, make sure to drop your comments. We'll circle back and answer them and reach out to you and make sure you get the information because this is really, really critical. Like I think it's really important, especially the Spark program. Like I'm like super excited about that.
Yeah. Yeah, it's fantastic. I've used it with many of my clients, and it's, I mean, it's wonderful. It's life-changing. It saves money every single month, and over the years, we're talking about tens of thousands of dollars.
Absolutely. And not to put you on the spot, but based on today's rates, like if they were to, qualify a new Spark, I know there's like that special math you guys do, like for every like 10,000 or 100,000, there's a certain like monthly, like roughly what would 1% save someone in a like just ballpark, not going to hold you to it.
Yeah.
I know this is like
Yeah.
the one thing you're like, don't throw me a curveball and here it is. But like,
No, you're fine. I'm just gonna do some quick math. Give me a second. I'll give you a real answer.
okay.
I do this every day, so let's see what I can do here.
Yeah,
Uh,
'cause I think that's important because sometimes people think like, oh, percentage point, like that doesn't sound like a lot, but when you're talking like a 6.5 versus a 7.5,
yeah,
when
yeah,
that goes down to a monthly payment, that's a really big, that's not like a latte. That's like,
right, right.
a lot.
Yes,
So
yes.
I don't want to throw a number
It's a
out.
latte.
Yeah.
um,
On a
yeah,
roll.
you're looking at roughly. I mean, I'm running this on a $250,000 loan. You're
Okay.
looking at roughly 120 bucks a month.
That's huge.
Yeah,
That is
absolutely.
huge.
Yeah, that's
For some people, it's like a week of daycare. I mean,
yeah,
that's substantial. So,
absolutely.
okay. Well, I hope if you're tuning in now, make sure you go back and listen from the beginning. Natasha has given us some awesome information about first time home buyers, essentially practically free money, how to get that. And then if you don't want to listen and you just want to jump right to the end, give her a call, shoot her a text at the number down below. and you can kind of cut through, this 20-minute video and get to your answers that are specific to you. So
Absolutely. There are no silly questions.
awesome. Well, Natasha, thanks so much for joining me today. I really appreciate your time.
Thank you, Jess. I appreciate you.
Okay, I'll talk to you soon.
All right. Thanks.
Bye.
Bye.